This is live stream number 17. In this today, we try to see the difference between swing trading and investing. As I know that there are a lot of people who have a clear idea about investing compared to swing trading, but for me, I want just to add more information that clarify all the differences between them. Okay, so right now I'm still waiting. I didn't see anyone who is watching, so I will begin in a few 1 minute or 2 or 3 until I have some guys coming. So as I told you, what is the real difference, okay, between investing and swing trading? Hello guys, I see Mohammed Benaba, DZ is here, okay, and we have Wiseman. Hello, good evening, Wiseman. Sorry, I have been a little late. It's like 10 minutes. I'm trying to fix this software. Always it makes me problems. Okay, so I see 8 people watching, which is a very good beginning. We are not going to be late for tonight. Okay, maybe we take 1 hour or 2 and that's it. So the subject of today is investing versus swing trading. Now, before we begin, we try just to make sure that everybody understand when we say invest, because when you go online, okay, there are 2 words that you hear a lot, which is investors and traders. But the problem is that when you go online, you find only they say investors, okay. Investors, they feel sad about the earnings, okay. Investors bought a lot today, which is false, okay. Just when we use the terminology of investor, it is false to say investor, because investor doesn't change his mind like a trader, okay. He buys a stock company, like shares, let's say 1,000 shares or 5,000 shares or whatever shares. If he is an investor, he will not sell tomorrow because of the stock has gone down or going up, or there is a gap down or going up. No, okay. And this when we see these words like investor, it confuses almost all the people who are watching the news, who are watching online. Big TVs, they try, when they use this invest, they use it incorrectly, okay. So my hello Zorba, how are you? Hello Vincent, good evening. So I will try to make sure you understand one thing. When we say an investor, okay, we mean to stay more than 1 year and to know the company that you are investing, okay. This is 2 criteria. If you are thinking to stay more than 1 year and you know the company that you are investing in, competition, earnings, balance sheet, you know a lot about this company, okay. So you invest in this company. There are a lot of people who buys for many years. The same company, for example, they work in a company and they offer them to invest in the stock of this company, not 401k. Okay? This is investing. It is not trading. Okay? Because it takes years, and years to make a big position. Okay? Now, some people, they do it, but they don't know they are investors. Okay? Most of the people who are who buys and holds for a long time. Okay? Some people, they do the mistake not to understand what they are investing in. So they get websites or TVs or chat rooms or forums or any media or Facebook or Twitter, whatever, or a guru or whatever, and they follow blindly and buying blindly for many years, and they don't know what is this thing that they are investing in. Okay? In terms of risks, in terms of competition, is this company becoming bigger and bigger, making more and more stores? Does this company is making money? At least making money with what you call earnings. Okay? But some, they have no clue. They trust other people, or they trust other websites or other gurus or other analysts, and they just buy blindly, and they say they know better than us. Okay? Now, this is not true. This is not true. All the information that the company supply, you find it there. In any website, you find the company information. You can even go to the company under the section of investors. Any company, most of the companies, they have a section at the bottom. It's called investors. If you click that link, you will find a lot of information, and you will find the prospectus, which is the summary of this company. What does this company do? What is its future? Does it make money, yes or no? What is its competitors? What it is doing in the future? The plans of the future to expand, to become bigger and bigger. Like most of the companies, they begin small and they become bigger and bigger because they have plans, and they reinvest their earnings into making more stores, more products, and more stuff. So if you are an investor, you should have ideas about the company that you are investing in. Okay? You don't just go blindly and just invest in something that you don't know because they told you, like stupid reasons. Oh, invest in gold because gold is scarce. Man, gold has thousands of years and it's always scarce. So what's the new thing they are giving us as information? Oh, silver, we don't have silver, a lot of silver on earth, we have just little, and it will disappear in 50 years or 100 years. These are not things, these are the things that some people are following information that does that it is not true. Okay? Now, for me, investing is, you must know the company. That's why a lot of people, when they invest, if you want, they invest in many companies and in different sectors, because you should not put your eggs in one basket. This is true, mostly true. Hello, Artkov. Hello. Because most of the investors try to diversify. Now, what does it mean, diversify? It means you don't buy in the same industry, on the same sector, a lot of stocks. You can, for example, buy here a stock. You go to another industry, you buy a company which is the best company in that sector. you go to another company. It's like this, okay? And most of the people, they know what are the best companies, okay? If they want just very quick to buy some shares and to hold them for the future, okay? So for investing, as I said, you should know the company, you should diversify, and there are some people who they just trust the market. They say, okay, the market sometimes years going up, years going down, so why I should care to see companies? I just use mutual funds or ETFs. Mutual funds is just a fund made of many companies, and the manager, he manages this company. Sometimes he sell a company shares, he bought another one next year, and it means he manages these companies. So some people, they like mutual funds. Some other people, for example, they like ETF, which is exchange traded fund. They find an index of an industry or a sector or a part of the market or whatever is the market, and then he buys the ETFs that tracks that index, and that's it. Okay, they just buy one or two or three and they leave it. They leave it forever because the market goes up, goes down. They don't care. What they care about is just many years they can make some money if the market is going that direction. But understand that when there is a problem in the market, most of all this stuff fail. Okay? For example, if you take a 2008 crisis, where almost all the financial sector collapsed, and when it collapsed, a lot of other sectors collapse also because they are interrelated. Retail, insurance, housing, everything. And millions of people, like here in America, they lost their jobs. Okay, because when a sector collapses, the businesses lose and they go bankrupt, and letting people go out of jobs, and or firing more people when they want to shrink. They fire more people because this is the first expense they think about. Because when a company has problems, the first thing they want to do is to fire people, because these people are taking money from the company. So they want just to begin with those because it is easy, instead of thinking what are the ways to make the company work better, or fire the executives who are not doing their job. So these companies, they go after the small people and they fire them. Okay? So there are risks when you are doing investing for the long run. So it is not just the time that determine your money. Hello, Jose, Joa. So it's not only time that determines your money, if you are a loser or you are a winner. No, it is the direction of the stock itself. And sometimes, and most of the time, the stock sometimes doesn't behave good as the company do. You find a very famous company, it makes it is good in competition, and it is the leader in their industry, but the stock, it doesn't do nothing, doesn't move that far. Okay, it's just because the stock of the company and the company are two different things. And this is why we go to swing trading. Now, if you want to trade for a short time, okay, you try to think about swing trading. In this moment, you are not thinking a lot about the company because you are not staying that long. In your plan, you are not staying more than 1 year or many years. In your plan, it's just you follow the trend. When the trend finishes, you just exit. Or when you buy the stock, if the stock is not doing good from the beginning, you try to exit the trade because you are not investing in it. Okay? So this is mostly the big differences in investing and in swing trading. It must be clear for you the difference, and from that you can either trade or invest in a company. So each style has its own techniques, its own risk, and the time that you should stay in, the time that you should exit. Okay? So here we have a question. A question from Vincent. He says, can you tell the direction of the stock of where it is heading based on the options? It is the options that follow the stock, not the stock that follow the options. So you, Vincent, you may have a confused idea. Okay? An option, a call option. Well, for example, when you want to buy a call option, just an example. What is the base thing you are basing your idea? It's just about the stock. You think that the stock is or will be going up. That's why you buy a call option. Now, if you think that the stock will be going down or having a downtrend, you buy a put option. So the option is based on the stock, not the opposite. So you should understand this thing. Hi James, or numbers 1 2 5 6 8 4 8 8. Is this your number? James is always his number. It doesn't change. Okay. So Vincent, you should understand that the direction of the stock is the trend, and if the stock is going up, the option will be going up, and vice versa. Okay? So the options are based on an asset, and this asset is the stock. They move together, but you know, calculations, they are not the same. They are not the same when they go up or when they go down. Hello Adams, how are you? Hello Chris Johnson. So as I told you, you should always have an idea if you are investing. Okay, and no one knows the future of any company, but you see that some companies are becoming bigger and bigger and becomes more famous and famous, and you see the earnings is better each quarter, and they are expanding. Now these are some signs of good companies. Okay, but if you go online, you will find more criteria how to choose a company. For me is only two things. If a company earnings and the stock itself. For me, if I want to invest in a company, I should see that the stock is moving up. If the stock is moving down for many years, I will never invest in it. Okay? Except when there is a change in the direction of the trend. Hello, Ruturaj. So Adams asks, what is the best strategy? Okay? So the best strategy for what? Are you talking about oh no, Adams, about strategies. I have my own strategies explained in my training. So if you want to the strategy, smaller stocks or bigger stocks, it depends on you, how much money you have. Okay, if you can't, for example, buy Google or bigger stocks, you can't buy them. You don't have money. So why you ask the question? You can buy only a stock that it is $5 or $1 or $6. You have little money. So always try to see, if you have a big account, you can trade whatever stock you like, small or big. But if you have a small account, you are obliged to buy smaller stocks. Okay? So here we have a question from Chris. What do you think about these ETFs that should volatility like XI? It is in a strong uptrend. What do you mean by XIV? These are numbers or are what is it, Chris? No, an ETF, it is just following an index. It has nothing to do with volatility or not volatility. It's what the stocks are doing in this index that the ETF is following. The ETF is a stock following an index. An index, it's representing some stocks, whatever. Like for example, if you think about Dow Jones Industrial, you will find 30 stocks, and the ETF DJIA is following the index. It has nothing to do with volatility or not volatility. Okay, nothing to do with that. I know you have a signal criteria based on what your mutual buy a stock. Do you also have a signal criteria when a mutual fund will sell a stock? No. When a mutual fund begins to sell, you see it. The stock is going down. It doesn't move. It doesn't go up. It stops going up. So the idea is to see, is it a small correction or is it a sell-off? When it is a sell-off, the stock will continue going down for many days or many weeks. If it is a small correction, the stock will have small correction a few days or 1 day or 2 days or 5 days, and then it will go up again. Okay? So this is, we know that there is someone who is selling, but not a sell-off. Not a lot of people, just 1 or 2. But you don't know who. Okay? You don't know who, because the market is a secret. You would never know who is who. Okay? After the mutual fund, after I think 2 months or 3 months, if they have a big chunk of a stock, they will put this trade. They say, okay, we have sold 5 million shares of this company because we don't like it. Okay? But it is after they sold, not before. So you should see the stock in order to know. And this is why I told you to use training level 7, how to follow an uptrend. It means how to follow a stock. When you follow a stock, there are some techniques that shows you if the company, when it goes down, is it small correction or is it a sell-off? This is the big difference. Sell-off, it means the stock will be losing a lot in few days, few weeks, or in 1 month or 2. You will see a downtrend. But you don't see the downtrend from the first day. No. You should follow the stock. That's why you need some techniques to understand this. And this is hey, Rituja, Deb, he has a question. What you use in technical indicators? I don't use. Rituja, I don't use any indicators. except from resistance line, support line, that's it. Okay, it's just these lines that I use to determine my entrance and to determine my exit. There is no other thing I use. I don't use volume, I don't use indicators, I don't use moving averages, I don't use them. All this I don't use. So Chris, shorts volatility futures now. See, try not you are trying, or some people try to confuse you with futures or options or other things. Now when you are confused, you will never know. So we don't need all these. What we need is just the price of the stock. If the stock is going down, you see it in the chart. It is going down. So what do you need more? Okay? If you buy a stock at $10, tomorrow is 9. The other day is 8. The other day is 7. What are you waiting for? Either you exit or you want to stay to have a big loss. This has nothing to do with the futures or options or currency, or it has nothing to do. It is a stock market. It has something related to the traders who are trading. Okay, and most of the time, people who are trading futures, they stay and stick to futures. Some who are options, they do options. Some who are doing currency pairs, like Forex, they are there. It means it is a specialization. It means some people are really doing that. Okay, and they understand it too much. That's why they stick to it, because of the risk. Some people, they like more risk. You should go to options, you should go to futures, or you should go to Forex. It depends on the risk. Yes, Rituraj Depe, you say I mean technical indicators for swing trading. Yes, I told you I don't use technical indicators in swing trading. I'm using only resistance line, support line. Okay, that's it. And my criteria of entering the stock, getting a signal, and following the stocks, and exiting the trade either with a profit or with a loss. So I don't use technical analysis like per se with indicators. Okay, so if you are using them, it's your problem. Okay, if you make money with them, stay with them. But for me, I don't. I have used them before, but they don't work. Okay, because each technical indicator is a strategy by itself. So when you use many indicators, you are using many strategies, and there is a conflict, and you trust these strategies that are a mixture of ideas, and then you will never understand why you should buy here or why you should sell here. This is the problem with indicators. Okay, they ask you to buy in some point. Why? You ask yourself why. You will have no answer, because the guy who does the indicator, he doesn't tell you why, and you are following someone who doesn't tell you why to use this or why to use that. But for me, if I teach you something, whatever is this thing, like a technique or a signal, I will tell you why we use these techniques. Okay, so this is the big difference. Another question, Vincent has another question. How do you explain in one of the stock in your live trading, it was going down for 2 weeks before earnings, and then it gapped up? What is your explanation? What its manipulation? Okay, Vincent, I don't discuss my training in live streaming, okay, because this is a public. Some people are not with us, they are not my students, some people they are just watching. So you can send me an email, and I can explain to you. It could be 1 week or 2 weeks or 3 weeks, depending on where I put the stop loss. You try to the training or to live trade, and you see the stop loss where it is. It doesn't mean I wait 1 week or 2. You see the stop loss. If it was hit, I will be out. Okay? For the gap up, it is just news. No one knows. It can be gap up, it can be gap down. Okay? So this has to do with the news. It has not to do with the stock trend. Okay? Sometimes the stock is going up, and then he has a gap down. So it has to do with the reaction of traders of the news. Okay? So Vincent, please send me an email. I will be happy to explain into details what's the thing that you don't understand. And manipulation mostly is in penny stocks, because they are easy to move. But bigger stocks with billions of dollars exchanged each day, you can't move that. You can't move that, and you play with it. Okay? Facebook, for example, you find $5 billion or 6 or 7 or 10 exchange hands daily. You can't change that. You can't play with this stock. But if the stock is $1 and the volume is 50,000, you understand that anyone can push it up or push it down. It's very easy. Okay? So this is manipulation, because it's easy to do whatever with the small stock. But when it is big stock, it is difficult. So try not to think a lot about manipulation, because we enter to a new phase of trading, is that whenever you lose money, you say it's manipulation. You try to give an excuse to yourself. Whenever you lose a trade, you say, oh, there are those short sellers, they come and they short my stock. Okay, short sellers, they short the stock. Even you are in or you are not in, they short it, because it is their job to short in order to make money. Sometimes they don't make money. Sometimes they lose money. Okay, it's just what they do. Rituja Depp, he say, what about the trend line? No, I don't use the trend line. I know about it, but I don't use it. A stock, the trend of the stock can be in thousands of patterns. Not every stock is the same as the other stock. Okay? So patterns, each stock is doing its own pattern. So in order to follow the stock, I don't use patterns. I use techniques that makes me understand where the stock is going. Is it going up or is it going down? Okay? So another question from Rituja. Then what you use for swing trading? Fundamentals? No, Rituja. Understand, Rituja, I don't use fundamentals. I don't see the company at all. We are in swing trading. Maybe you didn't see the beginning of this session. I said when you do swing trading, you don't look at the company fundamentals. We have no relation with it, because we are not staying that much. Now you say, what do you use? I told you I use resistance line, support line, and my own criteria, my own techniques to get the signal, to follow the stock, when to exit. Okay? So it is more simpler strategies than you might know. All what you know, or all what you have seen in your trading, or from other people, or from other teachers, or you see a lot of indicators, a lot of volume, a lot of stuff mixed up in the chart. For me, my chart is clean. There is nothing in the chart. Okay? The only thing that you can find is maybe one line or two. Where I bought, where is my stop loss, the resistance line, the support line. Those the lines that I use. I don't use any other thing. I don't use moving averages. I don't use the volume. Okay? The volume going up, going down, I don't care. Because it is not what moves the stock. It's not volume. Now, we have a Vincent. Vincent, we have a question. Will your signal and criteria works on ETFs? Yes. It will work on ETFs. It will work on mutual fund. Any chart it will work on, because it is based on price. It's not based on news, because the news change the price quickly in whatever direction, up or down. Okay? But the price, when you follow the price without the news, it should go to one direction, either up or down. Wasantha Kumara, he asked a question, do you trade Forex? No. I don't trade Forex. No options, no futures, only stocks, swing trading stocks only. Another question with Adams. Do you recommend trading small companies? No, it's, I told you before. Buy whatever you like. If you have the money to buy Google, why not? Okay? So it depends on your money. It doesn't depend on the company. But understand, smaller companies move faster than bigger companies. For example, if you take a stock that it is $5, $7, $10, $20, it can go quicker than a stock that it is 200 or 500, 700. Okay? So in the movement, they can move faster than bigger priced companies. Okay? Except when there is a big mover in the market and he buys more and more and more of a company. Thank you, Wasantha Kumara. You say, I learned a lot of things from you. Appreciate you, Mr. Karim. Thank you very much. I'm trying to explain things in general, but my strategies are very direct. I will tell you, do this, do this, do this, because of this and this and this, and you just practice. Okay? And you should know what you are doing. For me, in my strategies, I don't ask you to do something, and it is just, I say, ask you, oh, just do this, and it's okay. Don't ask questions about it. No. You should ask questions to understand why I use this, I don't use this. And you can have an opinion in the future. If you disagree with me in the future and you find another way, okay, you do it if you make money from it. That's why trading is always evolving, 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 and there is no restriction. You can do whatever you want, and you can try any technique that you think it can make you money in the future. Okay? I have another question from Peter Karavardian. I want to know all about small caps, also your opinion. What do you want to know? Small caps, it means small companies, $5, $7, $3, $10, $20, $15. You find small companies like this. What's the thing that you want to know? There is nothing you want to know about this. If the stock is going up, you make money. If the stock goes down, you lose money. That's it. There is no other thing that you put in mind, or there is a specific thing about these companies. The only thing I'm telling you is that they are fast, so the risk is bigger. Okay, the risk is bigger because if they go good up, you can make a lot of money. But suppose they go down very quick, you can lose a lot of money if you don't calculate your risk and you put stop loss. You can lose a lot of money. Okay, so this is the only thing I'm telling you about small caps or small companies. Okay, and because I don't use fundamentals, I see only the price. That's the thing I see. Hello, Mike. How do I access your videos sequentially? No, you mean, Mike, you mean how to access my training levels? Let's see. You should go to my website and you check. Here is the website and the email. You should go to my okay, you should go to my website. I put it down the chart. You click on the website and you go there, and then later you check, and if you have questions, you ask me questions. This is where I put all my training by videos and by ebooks. Okay, Adams, please don't put stocks. We are not here saying which stock we will buy. You take us to the other people who are doing things. No, it's not which stock you want to buy. It's when you get a signal according to my strategy, and then you can buy and put stop loss. It's not just you buy at random like this. Adam, I was just at the beginning of this session speaking about people who are following other people online, in chat rooms, in forums, and in news, in big TV channels, very famous big channels, and they ask you what to buy. Okay? Just because the company is big, the company is famous, the company director is nice, and so and so and so. We are not buying like this. We buy because of the signal that we get and the criteria that it is met. So you should check my training, and you should study, and you should understand what you are doing, and later you can check any stock with my strategy. If it is a buy today, you buy it. You put stop loss and you wait. If the stock is going up, you are right. If it's going down, you are wrong. Okay? You come in the wrong moment. That's it. So we are not putting stocks to buy like other channels or like other people. Okay? So don't put okay, there is another question. Adam, he say, listen, if one of the board violates Security Act, what will happen to the company if it is small? Now, see, Adam, why you are going so up like to a company? How many you are buying from this company? Are you a shareholder, a big shareholder, having millions of dollars you are thinking about? Adam, you have $5,000, $10,000 or $50,000 or whatever. You have small money. Stop thinking like you are a shareholder of a big company and you are thinking about something big. Okay? So stop thinking like that. Think about a company like a stock, like a symbol. Okay? Let's say Facebook. You bought Facebook at 170, for example. Just an example. If Facebook goes up, you make money. It has nothing to do with the company or Security Act or something. You are making a lot of trouble to yourself, and you are watching too much TV. Adam, stop watching TV and go to the real world. The real world is you go to the stock market, you find stocks, you buy a stock. If it goes up, you make money. If it goes down, you lose. That's it. Try to make it so simple and don't think about things that you will never understand. Me also, okay? It's I am not a big shareholder in a company to worry about violations or some stuff like that. Okay, so try not to. Hello, D Ramu. Please, we are not speaking about options here, binary option. Okay, it is very famous right now because all the small traders, they go after trading 1 month or 2 or 3, they lose all their money because they don't know what they are doing. So we are not speaking about options here. We speak about stocks, because when you buy a stock, you buy a share in the company. You buy something that it has value. Options has no value, okay? Because it will expire. A stock share doesn't expire. When you buy a share in Facebook, you stay 10 years or 20 years or 30 years. If Facebook is still here, yes, you will find it. But options, you should pay more money to stay in the trade. So that's why it is not a good idea to do binary options. Rituja have another question. He says, can you briefly explain your techniques of swing trading? Just a little bit if you don't mind. Just wanted to know where we, the learners, are going wrong. No, see, Rituja, I can't explain to you how to find the stock. This is part of the training. Now you said where you are wrong. Yes, you are wrong because you don't know how to buy the stock. When? For me, I will tell you when if you follow my strategies. So I can't give you this information because it is paid information. It is training. I can't give it for free. Okay? And it needs a practice. So you learn the techniques and then you practice in order to ameliorate. Okay? Another question from Peter Caraverdian. Can manipulators move small caps more than anything? Now, listen. It is better not to think about manipulations a lot, except when there is a pump and dump scheme. And most of these, you will see them in penny stocks, like under $5, $1, $2, $3, $5. This where you see sometimes manipulations. Okay? Because it goes up very quick, it goes down very quick, and you will never know why. This is manipulation. But smaller stocks like 7, 10, 20, 30, 40, these are small stocks. There is no that much manipulation there. Okay? So forget about this kind of manipulation. Vincent says, I know there is no guarantee that the stock will go up even with your signal and criteria, but I want to high probability that when I pick that most of my selection will go up. I don't want to waste time on too many wrong selection and hitting my stop. So what do you want to do? Do you want that someone comes with a strategy knowing the future for you, and he will give you just this technique to do it, and each time he will know what other people are doing next day? So you are asking for something that it will never happen. You are asking that someone will show you how he will know the future. If someone doesn't know the future, how can he teach you to know the future? So Vincent, stop thinking like that. When you are doing the trades, okay, Even if you do 2 or 3 or 4 mistakes, these are not mistakes. These are losers, because you find a stock and you are wrong. You should find another one until you find the best one. Okay? Now, if you say, I don't want to do many attempts, okay, don't do trading. Stop doing trading. I'm telling you, there is no other way. And if you're if you're thinking that there is someone who knows, which you call high probability, you are wrong. And you will go and you will lose more money than the other steps. You should attempt. And you don't say, I will see this one, I will see tomorrow what it does, and then I will buy it. Or after a few days. Because there is what we call momentum. You should buy stocks on momentum. If they go good, you will be making money. But attempting, it is a true thing in the market. You should attempt. Okay? There is no way out to just select a stock and then it goes up and then you make money. You want a guarantee to guarantee the market will give you the future of any stock. And this, it's not true. And if you are following this, you will follow in many years. Okay? It's just a dream. It doesn't exist. So this is according to my experience. There is none. All strategies specify some entries. For me, I have many entries, and this is what I teach, depending on where the stock is in the chart. If it is at the bottom, it is support line. If it is up, it is resistance line. Sometimes it is in the middle of the trend. In each technique, you will find a way to buy by using techniques, but they are not guaranteed 100%. And there is no guarantee whatsoever. 1% or 100% or 50%. It's just, if you are right, you are 100% right. That's it for that trade. But there is no guarantee. So Vincent, try to change your mindset. It means the way you look at things. If you are looking for something that doesn't exist, for example, you are here, like here in America, you are looking for Bigfoot, you will stay the whole life hallucinating, seeing pictures online that there is Bigfoot and it is there near your house. There is none. Or there is a dinosaur in the forest near you. There is none. Okay? So, if you want to believe, let's say UFO, you want to believe that they exist? Yes, believe. But you waste all your time searching for something that doesn't exist. Okay? So, for me, what I'm teaching you is the real life in stock market. I'm not going to push you to dream. There is no dreaming in stock market. It's a business. You buy stock and tomorrow you are wrong. You should exit. That's it. There is no other way. There is no other way. You wait until the stock will go up again. There is no guarantee whatsoever. Okay? Hope, Vincent, you understand this idea. Joshua, Luz, good evening, Joshua. Hello, incredible product. Yes, you say Vincent is not about wasting time. This is not get rich quick. Yes, there is nothing that you get rich quick. There is none. So you should work. You should study. You should know the techniques, apply them, and work with the probabilities. This is what I always ask. Okay? Probabilities. And this, Vincent, if you are listening, if you go to training level 5, maybe you have it, that training gives you how to make money from the stocks. That is the concept that everybody is using, but none they will deliver this. But this is the actual real thing in the market. So go to training level 5, how to make money from stocks. Study it again if you have it. If you don't have it, order it and study it. It will give you the general idea how people make money in the market. There is no guarantee, there is nothing. You need patience. Yes, you need patience. Hello, Zofa. He asked the question, Zofa 300, he asks, hello, what screener tool you are using? Can you tell me more? How do you pick some of these stocks? For example, do you focus on PE ratio? Oh, that's a good question. Hey, Zofa, that's a good question. First, stock screener. Okay? Put stock screener in the Google, you will find hundreds. It's not about stock screener. It's about the criteria that you put in the stock screener and the other criteria that you choose the stock. This you will not find them online. The stock screener is just a means to search for stocks. But what you are searching for, you will not find it online for free. It's a training that I am offering here. It's a paid offering that I am offering. Now, and then you ask me, can you tell me how do you pick some of your... No, these are criteria. I don't give criteria. I don't explain my training for free. Okay? So this is a paid training. You should go to my website here at the end. At the end of the chat. Okay? Check my website and go there and check the training. You get an idea. But for example, you say, do you focus on PE ratio? No, there is no PE ratio. No. I am not looking at the company at all. Anything related to the company, I don't look at it. Balance sheet, earnings, debts, and the other stuff. No. Zofa, if you are interested, either you can take my subscription. It has 4 training for free, and it has the subscription itself, which I show you how to search for stocks, how to select them. There is the training level 1, 2, 3, 4, and there is the actual practice. And there is one live trade that I have done, and I'm still in for 3 months. You go to the subscription and you study all the material. If you have a question, you can send me an email. Okay, this is how it works. Okay, so I can't give you my criteria and I teach you for free online. I can't. This is a live session where I just explain the general ideas that I have, and to make clear, not to be mistaken, for example, of swing trading and investing. So this is what I'm doing here. But my explanation is in the training itself, not here. Okay? And Vincent asks the question, are you saying hedge funds can't manipulate even medium or big stocks? No. Hedge funds, they do trading. They don't manipulate. If they short a stock, this is not manipulation. It is something that everybody does. But because they are powerful, and if there is no mutual fund that it is behind the stock, they can make a lot of money. But understand that some hedge funds, they follow mutual funds. When they want to sell, they go after them and they begin short selling. Okay? This is our techniques they use. Sometimes they succeed, sometimes they don't. It doesn't mean that a hedge fund is just a manager. He's just a trader. He can do good trade, he can do a bad trade. So don't expect that hedge fund can do whatever in the market. No. But he has some good money in the market. A hedge fund, if he has $50 million or $500 million or $1 billion or $5 billion in his hands, he tries to do good trades, but sometimes he do mistakes and he loses some trades. Maybe he short a stock and there is one guy who is a mutual fund behind him and he wants to buy that stock. So this hedge fund will lose because he is smaller than mutual fund. Let's say mutual fund has $100 billion and the hedge fund has just $1 billion or $500 million. So you understand that it is a power that manipulates the whole market. But if you buy a stock, you are a manipulator in general terms. But for me, when I say manipulation, I always speak about penny stocks. I'm not speaking about general stock market. No, because he just buys in order to stay. A mutual fund, for example, when he buys a stock for 1 month or two, he wants to stay 1 year or two in order to get profit. He doesn't want just to buy and then sell, because the rules stop him from doing so. A hedge fund, yes, he can buy, he can sell, whatever. He has some a hedge fund is more free, for example, to do short selling. A mutual fund can't do short selling, okay, because he will make the market worse, because he will be against investors, because investors, when they give money, they expect that the price will go up, not to go down, and they are not interested in short selling. Peter Caraverdian, he asked a question. Only high probability is selling options premiums. No one likes to do because of small reward. Everyone wants a small risk, big reward, and it doesn't work. No, it works. Small risk and big reward, this is what we do as a swing traders. Okay? Now, selling options premiums, it could be, it's just a trade. If you sell option premium, let's say for 1 month, you will never know what happened in 1 month for your stock. Sometimes it is against you and the stock is going down. Let's say it's going down and you can't exit the trade because you have options. You have sold premiums and you get some money. So if you for those who sell premiums, they should have thousands of shares, and this is what they do. Okay, they can make money if things go well for them. Okay, but understand that they risk always their stocks. Always they risk. So thinking that someone is not risking, this is not true, even for sellers of options. But understand that my training is not about options or selling options or something like that. Kali Native Imperial, you say, is 10,000 too small to start? No, no, no. You can start with whatever money you have, because in the stock market, there is no one who stops you. Okay? No one will stop you. If you have $1,000, you open a broker account and you begin to trade. Who will stop you? There is no one who stops you. So stop thinking about the capital that you have. The general rule, the more you have, the better you will be. That's it. This is my rule. Okay? If you have more and more and more and more saved in a big account, it will be better than to have small account. That's what I always say. Yes, yes, this is true for incredible product. Uh, don't expect too much. Okay, don't expect too much. This is why the people, they always fail to understand trading. Okay, they think they come to a place where it's like gambling. They put few dollars and they want thousands of dollars each time. It doesn't work like this. Okay, so it's not what we call a quick get rich scheme. So you need to practice, you need to have more money, and that's it. So another question from Zofa 300. What is the difference between the subscription and getting the training? Oh, yes. Okay. Now, the training, the basics of the training are 10 training levels. Training level 1, 2, 3, 4 until 10. This is the basics. When you get these basics, you will get a lot to understand. All about buying, selling, stop loss, how to follow an uptrend, money management, account management, risk, and other stuff. All these is from 1 to 10. If you are experienced trader, you can go to shorting stocks or buying from support line and the other stuff. Now, subscription is a practice on training level 2. How to search for stocks using stock screener. This gives you practice. I will show you how to search, how to put the stocks into a chart, what are the criteria that I search the stock for. So in each trade, in each when I upload videos, each week I will do a search. Okay, and I have added 4 training for free. It means training level 1, 2, 3, 4. You will find there for free. Okay, so you just go to training, check the training first. What are they about? 1, 2, 3, 4, 5, 6 until 10. And then if you want to begin with subscription, because it has 4 training for free and the subscription each month, you can do the subscription. And then when you are good, you can go and finish your training level 5, 6, 7, 8, 9, 10. Okay, so my training is step-by-step training. It's not you take it all. Okay, so you should have time to study, to practice, and then you ask me questions. When you have questions, just ask. You send me an email, I will answer you. This is how the thing works. Zofa 300. Just for YouTube, Kareem, what is the longest you have stayed in the trade when you bought for swing? Now see, right now I am in a trade that it is 3 months and 5 days. I bought the stock in the 1st of May. Now I sometimes have 5 months, sometimes 6 months, but I don't think I have exceeded 6 months. Okay. Now this trade that I am in, I'm still in, and I make videos about it, and it is a live trade. You can find it in subscription or training level 7. Okay, and I'm still in. We have a gap up on Thursday. We have a gap up, which is very good for us, and we are continuing to be in this trade. So I will never know where I exit this trade, but we are 3 months and 5 days. Excuse me. I have a question from Healthy, Wealthy, and Stealthy. What do you think of DXTR? Okay. We are not giving. Excuse me. I get some stuff. We are not giving opinions about stocks here. Healthy and Wealthy and Stealthy, if you are going to be with us, be a student, you should take the training step by step. understand how we find the stocks, what are the criteria, and then you can apply this on any stock and you will find if it is good or bad to buy. But I will not give you an opinion about a stock like this. Okay, there are criteria that you should find, that you should put into the stock, and then if it is a buy, it is a buy. If it is not, it is not. This is how do we find stocks using stock screener or any stock. I can put many stocks in a portfolio and I follow them. When one has my criteria, I buy it. Okay, so you should need to go through training. And here is the let's say here, let's say I give you the website, you can go and check. What's the thing here? What did happen? I tried to copy that. Ah, it works. Okay. So, okay, you can see my website. You can go to my website and check for the training. And then if you have questions, you just ask questions. You can fix and roll the trade. Healthy, wealthy, and stealthy. Okay, it's gonna gap up on Tuesday. Okay. And what else? What else you know about the future? Are you going to stay until Tuesday? Who knows? Okay. So this is what healthy and wealthy and stealthy. What you are saying here is what we call predicting. Predicting, anyone can predict. You say there is a gap up, someone says gap down. It could be gap up or gap down. So how do you know? If the company doesn't give you the news, from where do you know? So stop predicting the future. Okay? So you will never know. This is for sure. So as I told you, healthy and stealthy. If you are here to advertise for a stock or something, I will take this that thing that you put. I don't like people who put stocks in the chat rooms and begin to explain something that we are not in. Okay, so thank you, healthy and wealthy. As I told you, predicting is very easy. You take any stock. No. Healthy and wealthy. If the company gives the news, the reaction of the trader, it will be immediately. It's not 2 days. You say Tuesday. And what about Monday? The company doesn't say news. If it says on Friday, the news after the market close, you will see it after the market if there is any change in the price, or you should see it on Monday, not on Tuesday. So here you are wrong in your expectations. Okay, so I don't know about this stock, and you say the reported earnings early. When is early? And why you say Tuesday? If it is Friday, the earnings, you will see the price. Okay, so I think you are wrong in the thing. You should try to see the earning date first, when it will happen. If you say it happens earlier and the stock hasn't moved, it probably on Monday it doesn't move. So why you say Tuesday? Tuesday is far, far away. And the earning dates, it doesn't work like this. Okay? Sorry. And we have a question of Zofa 300. He says, how often you need to watch the stocks daily? As if I am working, I have few minutes to watch. Oh, okay. See, Zofa, this is what I do. If I buy a stock, let's say, I always buy a stock at the end of the day, like let's say 3:30 p.m. I search for a stock, I find the stock, I buy the stock, and I put stop loss, and then I close my account. The next day, at the end of the day, let's say 3 o'clock or 3:30, I just check. But for me, most of the time, I don't go to my broker. I have the chart. I put the lines where I bought, where is the resistance line, where is the support line, where is the stop loss, and I see from the chart. So I don't need to go to my broker. Okay? So you don't have to watch your stocks every minute or every half an hour or 1 hour. No. Leave it at the end of the day and just watch it. Okay? If the stock is going up, it's good for you. You begin making money. If it goes down and reach your stop loss, you exit. That's it. And you buy another one. Joshua Luce, describe your technique with candlestick, please. Joshua, I think you are wrong here. I am not explaining my teaching, my training here. My training is a paid training. So you should go to my website, you should check the training, and you begin studying. And then you begin to practice. And then if you have a question, you should ask me. But I don't explain my techniques. But I can explain things. You go to my channel and you find a lot of information. Healthy, look at the chart. What is this chart? What is the earning date? Check yourself what is the earning date when the company says news. If it is on Friday, after the market close, just an example. If it is this Friday, you should check after hours what happened to the stock. Does it go up or go down? And then, if there is nothing special, you should see Monday. Okay? This is how we see earning dates, if it is good or bad. And you say Tuesday. It will never happen Tuesday. Because if the traders, they try to respond to the news immediately. Okay? Zofa here has another question. How much success percentage against money lost you have with the criteria you have? Just want to get some confidence if it is a really successful criteria. EEC, the thing that you are asking is the question is itself is wrong. Success percentage, there is no in my strategy which is called success percentage, because it depends on where you are in the market. It depends on how much experience you have. It depends on which stock you bought. Let's say I and you, we bought different stocks in the same day. Let's say my stock goes up, your stock goes down. Okay? This is because of our choice. And because of our choice, we get results. And these results differ. Okay? Differ from one to another. And you say, in order to get some confidence, if it is a really successful criteria. Confidence, you get it when you understand what you are doing in trading. Now for me, how do you get confidence when you study my material? Is that you don't do something without just blindly you buy you buy and you blindly sell. You should understand anything that you are doing in the market. Why you buy this stock, where you put your stop loss, how to follow the uptrend or the stock. All these techniques are explained into details. It means when you want to do something, you should be confident in doing so as the best strategy. Okay? The strategy doesn't work by itself. It is you who should work in order to acquire these skills, in order to become a better trader. If you give the best strategy to an idiot, he will never get money, and because he doesn't know how to study, he doesn't know how to apply things, he doesn't understand anything. He just do some instructions without knowing. So for me, how I teach, it means I teach you to understand what you are doing. Any technique, we should get a debate or discuss the technique. If you are not okay with the technique, we can discuss it in order to get a better understanding of the technique and the skill. You need to be practicing. It's not theory that makes you the money. It's practice. In the practice, you see different situations and you should know how to solve each situation you are in. Okay? That's what we are teaching. Zofa, you say, I mean in your own stock. I don't have a percentage, but I am making money. For the long run, I am making money. This is for sure. Now for trades, the question between the ratio of winners or losers, I don't have it. This is a false concept. If you, Zofa, you want to understand how I make money from stocks, you should go and see training level 5. I will write it here. Training level 5. You should go to my training levels. It says how to make money from stocks. It gives you the concept. It's not the winners versus the losers that makes you a good trader. You could have 75 winners and 25 losers and still you lose money. Now you tell me how. I say go to the training and study. You will find the real concept in stock market. What the people say about winners and losers, most of the people, they don't trade. They don't know. Because they don't trade, they don't understand that what they say is false. Okay? They just, because the beginners, they don't understand this ratio. Since they don't understand, other people, they take advantage of this ratio and they promise them that they will get a better ratio in order to make money. And making money has nothing to do with the ratio. Okay? That's it. If you understand the concept, you will become a better trader and you will see the whole picture. Joshua Lewis, a question: how to follow the big guys into a trade? Now, when you buy according to my strategy and the stock begins to go up, so you are following the big guys. Because we follow big mutual funds and big guys in the market, and these, they form the trend that you see, the uptrend. Now, if they are selling a stock, for example, or an industry or sector, you will see that they are selling and there is a downtrend. Okay? So this is the ways to follow. So in order to follow, you should use my criteria first to buy. And then when you buy and the stock goes up, you are in the a good path. It means you are making money. Another question: I am talking about your success so far. Last year I get 62%. This is what you want to know. This in general, yes. Just for YouTube, how do you evaluate a strategy if it's good or bad? How to evaluate a strategy is first by looking at your account. Are you making money or losing money? Okay? And if you understand the strategy, yes or no. And if you practice, because strategy has techniques, step by step techniques. In any strategy, it should be speaking about everything, about the account management risk, about the trade risk, about the plan, about when to enter, what are the entry points that you can enter from. Okay, for me, for example, I have a lot of entries, and I explained in my training, depending on where the stock is. Sometimes the stock is going down and then it stops and then it's going up. This is a strategy. Sometimes the stock is beginning to go up and then it continues for having an uptrend. Okay? So it depends where the stock is in order to change the strategy that fits that stock. That's the strategies. So you should work on the strategy and ameliorate your risk, ameliorate your performance by practicing in real. It's not theory. If you think that you compare strategies just by theory, it will not work. It will not work like this. It works by understanding what is the strategy steps and how do you enter, how do you exit, how to follow the uptrend. It's a lot of stuff. Hello, Mersh Para. You come late. We have been here for 1 hour 27 minutes. You say just for YouTube. I think that's what Zofa wanted to know. Yes, I answered him. But understand that there are a lot of variables when you are trading. Okay? Let's say there is an industry that is going up. A lot of mutual funds are buying. Now, if you know that industry, you can make a lot of money because that industry will not stop in 1 week or two. It could stay 6 months, 8 months, 1 year, 2 years. And it's still going up. It happened before, for example, for the precious metals, 2009, 10, 11, anyone who buy gold and silver and the other stuff, he was making money. Most of the people. But one day they stop going up and they go down. So almost all the people who buy gold and silver after April 2011, almost all the stocks were going down. Why? Because the trend has finished. It stays 1 year or 2 years and it's finished. And mutual funds are selling. Okay? Since they are selling, they want to exit very quick. If you stay, okay, you will make a big loss. And this is what happened in the market. So you should always follow the market. There are techniques to follow the market. If you use training level 2, how to search for stocks using stock screener, you will find all the stocks that move. If you want to search for industries with their stocks, you can use training level 3, how to search for stocks using an industry index. It means what we call industry rotation. Some industries are bought, they go up. Some industries are going down, they are sold. So it depends where you are in the industry. Are you with the winners or are you with the losers? This is in general how do we follow stocks and we find stocks. Just for YouTube, you say, what's your suggestion, recommendation if one is planning to start day trading? Okay, if you want to start day trading, you can check, for example, training level 12, how to day trade using candlesticks and charts. You can begin with that training. It gives you techniques how to buy, but you need to do a lot of work. You need to have the morning free. It means that you don't work in the morning. Let's say you have a second job, or you have a third job, a third shift job. Okay? It's good to do day trading because in the morning you are free to wake up early and to begin searching for the news, searching for the indexes, searching for what the market is, checking all in the morning. But I'm telling you, day trading is a very frustrating style of doing business. Okay? Because you find a lot of directions in the day. It's up, you are thinking that the stock is up, you buy. After a few minutes it goes down, you think it's down, you begin to short, and then it goes up. So there are a lot of frustrations and stress with day trading. But if you like it, you can do it, no problem. You can do it. For me, I was doing day trading, but I stopped. And I find swing trading better. There is no stress. There is no... You shouldn't wake up in the morning to find the news, volume, and the other stuff. And I am not competing with anyone. I am following the big guys. When they move, I move with them. When they stop, I stop. When they sell, I sell. That's it. Okay? So for me, it looks like easy, and this is why I teach swing trading, and I make a lot of training from the beginning until the end. But it depends on every person. Some they like day trading, some swing trading, some investing. Here we have Mersh Para. We have a question. He said, I get scared when I enter a position. If it starts to go down, then I remember it's a bull market. But I sell a day or two before it zooms up. You know, one of the problems of the traders is to get scared of the market. Okay? So why are you scared? When you buy a stock, put the risk, which is a stop loss. Let's say it is $100 for 100 shares you bought. Just an example, okay? If the stock doesn't move up and it goes down to that stop loss, you exit. It's automatic. It becomes automatic thing because you plan the trade. So you should not get scared. But if you are getting scared to lose, don't do trading. Trading is for the people, and investing is for the people who like risk. If you don't risk anything, you don't get anything. Okay? Why someone has, let's say, 100,000, 200,000, and he goes and he opens stores and he began doing business, buying or selling, or a service, or buying and selling things, or a retail store? Why the people they risk all what they have in order to business? Do they know that they succeed? No. No one knows they succeed in a business. But they do risk. But later, when you find this guy making money, you are thinking about how this man is making money, but you don't think about the risk he has. because you are scared to do the same as him. And this is in life. Almost all the people, they like jobs because it gives them security. But understand that the job, okay, you can be fired at any moment, at any time of the year. Whenever the company has problems, they can fire you. Even if the business is good, you can be fired or laid off or something like that, because you don't have a business. Okay, you don't risk. That's why the people who risk money and risk their time doing some business, most of the time they succeed and they have a lot of money. It's just because they risk their money at first. So if you continue and you say, I said a day or two before. Now, you should always put a stop loss if you are doing swing trading. You shouldn't leave a stock unattended. Okay? You say you buy a stock and you leave it, and then you begin to think what to do next. In 1 day or 2 or 3, you begin to think. No, you shouldn't think like this. Before you buy the stock, you should know where to buy it and where to put your stop loss for your risk. This you should do it before you plan for it. And when the stock reaches your stop loss, you exit automatically with the stop order. So it's not you buy a stock and then you leave it for 1 day or 2, and then you begin to think either to stay more or to sell. No, this is not business. You are doing something which is wrong, and you will pay for it 1 day. Let's say you leave the stock unattended, you don't put stop loss, and there is someone who is shorting the stock that day, and you will have a very, very big loss. It's just because you did not have risk. Okay? So you should always buy, then put stop loss. Always. Hello Zofa. Your book on Amazon, Djellala Swing Trading Strategy Basics, is equivalent to how many? Oh, no. I think it's training level 1. Training level 1 only. No, it doesn't cover a lot of topics. You can, it doesn't cover a lot of topics. I have some, but you can buy cheaper from my website than Amazon. Amazon are more expensive than my website, because my website, you have, I think, 70% on ebooks discount. I think it's 70%, 75% on discount on ebooks. So they are cheaper on my website. Here is my website. You can check the price. When you put the, when you click on the training, and you will see the price. Okay. Hello, MC4 Piece. You come late. Thank you, Mersh Para. You say excellent knowledge. Very true, sir. We are discussing things here, and if you have an opinion, if you have an idea that it is not the same as my idea, we can discuss it, and we are here for that. We discuss. But for me, since I have a lot of experience in stocks, I can tell you that a thing will work or it will not work. Okay? And you can do any strategies that you like. No one in the stock market will stop you from doing any strategy. But if you make money, that's it. You don't need anyone else if you make money. But the problem, if you are losing money, that means you are doing mistakes. Sometimes it is just basic mistakes. Like this guy, who is buying stocks and doesn't put stop loss. This is a basic mistake. Okay? I think MC for Peace have a question. He said, I know it's not the topic tonight, but how different would you say the Forex market is compared to the stock market? Can you trading strategy also be used in the Forex market? Now, see, Forex market is mainly for banks. They buy and they sell currencies and they compare them. Okay? So, stock market has to do with companies, and this is a big difference. So try not to mix these two words together. Stock market, when you go to, let's say, to stocks, equity, as they say, or companies' shares, it has some rules, some criteria that are different from Forex, which is currency pairs. They are not the same. The risk is not the same. The market is not the same. The owners are not the same. Everything is not the same. Even the broker is not the same. Okay? So understand that it's a big difference. If you are going to do Forex, okay, you should use day trading. You should know about candlesticks and entries, and you should do that, day trading. But we are not doing that. Merge Para, I had Momo 1980, sold it because it did not move, and then it went up to 44 in 2 weeks after that. Merge Para, please, did you use my strategies, Merge Para, when you buy this stock or when you exit? You can, Marsh Para, please, you can send me your trade and we can discuss it in private, and I can give you insights. And if you did not bought or ordered my training, that will be something else. So Mersh Para, see above, you find my email. You can send me your trade and we can discuss it. Because if it moves, now, first, why do you exit? And it moves, there should be something that comes, and there is a big buyer, for example, or something. It happens. Nas Dilanochi, how are you? You come late tonight. Hey Karim, can we use the red successive candlesticks probability on the swing trading techniques? Will teach short sellers selling back? Nas Dilanochi, you can just go to my training, which I think it's training 15. I think it's training 15. Try there, study it again, and then send me a private message with the stock that you see, and we can discuss that, because this is a private question about my training. Okay? So this is private about my training. So I can't speak about explaining my training or details into live stream. So it should be private. So Nas Dinaruchi, you can go to the training, which is training level 15, and you study it and send me your stock and we can discuss it. Hishamzer, are you a millionaire? Not yet, but I will be in the future. That's a funny question. George Gonzalez, thank you for all your advice. I am new trader and I have seen a lot of videos. Thank you very much. Thank you, George Gonzalez. But understand that all my explanations are my general ideas about the market and how I trade. But if you are serious, you can go to take my subscription or my training from training level 1 to training level 10, and you begin to study step by step, and you study my training. Okay? It needs time, it needs to understand what you are doing, how to find the stock, how to search, how to get the signal and the criteria, how to put the stop loss, how to follow the stock. So all these you should understand later when you study my strategies. So it's better to study the strategies. At least you have a clear idea about what you are doing. Thank you, Nas de la Noche. Yes, send me an email and we can discuss this. And you can tell me the stock that you are speaking about. And according to my strategy, we can discuss this and we see what's the issue. Okay? So, as I told you before, the thing between, as we can do, between swing trading and investing, it's a total difference. You can't compare them. One is like investing is based on the company. You should know the company. You should know about the company. Earnings, expansion, competitors. Okay? You should know a lot about this. So, you can't just invest for many years for a company that a friend tells you, oh, that company is good, just go and buy it. You buy 5 years, 10 years, until you get $2,000 or $300,000 in that company, and this company is a loser. And the more you put the money, the more you lose, the more you put, the more you lose. And you will never understand until it is too late. Okay? So, investing, if you are an investor, you should know what you are doing. You should know the company you are investing in. And if you invest in one company, you are having more risk than having 5 companies or 3 companies, for example. Because you shouldn't put all your eggs in one basket. If they fall, all your eggs will break and you will have problem. Okay? So, and swing trading, this is what we do. You don't need to see the news or a company or fundamentals or expansion, whatever. You should see only the price and the ticker. It means the symbol of the company. And then you do the trading. Okay? So this is how we trade. We trade by the price, and we don't look at the company. For me, I see only symbols. Okay. Facebook is just FB, so I don't see that it is social media, or I don't care about what is it. What I care is that is the stock is going up to make me money, yes or no. This is what the most important thing that we are like following. So please, if you have more questions, because we have been here 1 hour 49 minutes, we have about 9 minutes, and maybe we stop for this live streaming. So if you have questions, more question about swing trading and investing, you can just ask. If you have like a private question, always send me an email and expose your problem or your idea, and we can discuss it in private. and hope for those people who are following my live trade. We are in lesson 11. I am still in one trade from the 1st of May 2017. 3 months and 5 days. Today is the 5th of August. I bought it on the 1st of May. You will see how I follow the stock, and this information you find it in training level 7, how to follow a stock, or in the subscription. Okay, if you have one of these, you can go and search these videos, and then you can watch them and look at what I did from the beginning until the end, and what are always my probabilities, and how do I act or make an action to the stock, and when. This is very crucial if you are following a stock. Okay? You should get the information first and then react. And you don't anticipate, and I have read this before, like 2 years or 3 years ago. There is a famous trader, I forgot his name. He says, don't anticipate, just participate. It means participate with the price, with the flow of the trend, and don't predict anything. So for me, if you tell me in your stocks, what do you think tomorrow? Are they going up or going down? I tell you, I don't know. And I don't care. I don't care because I don't know. How am I supposed to know tomorrow what will happen? For me, I should see tomorrow what will happen, and then I take a decision, what should I do? So you should adapt and to any situation, and you should find a solution to your situation directly and daily. And this is what I teach. It means when I teach you how to follow the trend, all the techniques I teach is just to solve your problems and to give you a better way to deal with the stock. Okay? Let's say, for example, someone told me before, why you don't use trailing stops? I tell him that I am not using trailing stops to follow stock, because this is illogical. The stock can go wherever it goes, up or down. So if I put trading stops, I will exit the trade in many cases. So I will be losing money. But my techniques for following the stock is different. It doesn't work with trading stops. So there is a question. Ansel of the Chrome RC, he say, hi Kareem, is there a particular place I should put stop loss in general? How much leeway should I give the downside? See, on Silo or of the Chrome RC, there is training level 6. Okay, if you can just go to this training level 6, and to in my website, it teaches you how to search for stocks. It teaches you how to calculate stop loss. Stop loss is tricky. It's not a percentage that you should put always and that's it. No, there are many criteria, many variables that you should know before you put stop loss. Now I will show you all the ways you can do stop loss, and you should understand each one and then choose one that fits you. Okay, so on Silo of the Chrome RC, you should go to let's say this training level 6, and then you can you can study it and begin to practice. And then when you find when you confuse or you don't know, we can discuss this with a stock in real. You send me a stock, you buy it at that price, you put stop loss at that price, and then you tell me, Kareem, what do you think? I am wrong or I am right? And we can discuss that. Because stop loss is tricky. It's not easy. A lot of people, when you go online and they ask you, oh, just put 5% or 10% or 1% and that's it. No, it's not this. Some stocks need 1%. Some stocks need 5, some 7, some stocks need 10. Some, it depends. And each trader is different. You, for example, your risk tolerance is different from me, and I am different from someone else. Okay? So stop loss, there is not only one, there are many. So it depends on the person, depends on the stock, depends on the market, it depends on many things. So answer of the Chrome RC, if you are serious to study well, to know how to put stop loss, go to training level 6. It is called How to Calculate Stop Loss, either in videos or in ebooks. You find it in my website. And then you just study it and you begin to practice. Thank you very much for this question. And always send me an email, istockmoney@yahoo.com, or go to my website, which is Djellala. Okay, here is my email and my website. You can go to my website, check training level 6, check the information, and if you have questions about other training, just send me an email and I will respond back, and I will answer all your questions. So I will be waiting for a few of your questions, and then I will finish this live stream for today. For those who have not watched my live trade, just go to training level 7 or my subscription, and you will find the trade that I have begun in 1st of May, and I'm still in. We have a gap up on Thursday, which is good for us, and the stock is still going up, which is a very good trade. If you ask me when are you exiting, I don't know. We should continue following the stock, and when the time comes, I will exit the trade. Thank you very much, Nas Dilanochi. Send me an email, as I told you, and we'll discuss this in private. And anyone who has something in private, you should contact me by email. And because here we are doing just general questions about general topics, and I explain as much as I can to help you guys with this trading or investing thing. Okay? So if you have more questions, please ask, as we are at the end of this session for today, Sunday, or we are now in Sunday. For some people are still in Saturday. We have Eastern time, and we will do the same each Saturday at 11 p.m. we do a live stream like this. And it's better to ask me questions, send me emails. At least you will not be waiting for me until I come here and this live streaming, and you can ask your questions. If it is about training, always send me an email. Check my website and check if you have questions and stuff. Okay. So if there is no more questions, I will be ending this live stream. Okay, wise man, have a good night, Kareem. Everyone, thank you, Kareem, for giving us your time on Saturday night. Thank you very much, wise man. I am always by email. I'm always there. Anyone who asks me a question, I'm always there to answer on time. Whenever I have time, I answer questions, and we continue doing this live streaming because it's very good to see traders and they ask questions directly and try to expose ideas. Adam, he has a question. Please give us example of monopoly. No, monopoly of what? Well, what kind of monopoly are you speaking about? Example of monopoly. I don't understand your question. Monopoly of what? It means someone who bought all the stock by himself, or what do you mean by monopoly? I don't understand your question. If you give explanation. Auto chartist. We're saying auto chartist. So what do you mean by auto chartist? So Adam, could you explain what do you mean by monopoly? What do you mean by monopoly? Is it in trading or I have no idea what do you mean. So as I told you before, we will be ending this soon. I am just waiting for Adam S to say what is this monopoly that he is speaking about, and then we can end this session. I'm still waiting for him to give me an explanation. Yes, Adam. So what do you mean? So Adam, you can send me an email. Here is my email on the bottom of the chart of this live chat. istockmoney@yahoo.com. You can give me an explanation. What do you mean by monopoly? And I will continue the discussion of this thing, because sometimes when the question is not clear for me, I can't answer it. Can you tell me same information as auto chartist? No, what do you mean by auto chartist? I don't understand you also. Were saying I don't understand. So you should just make it clear what do you mean by auto chartist or monopoly. I really don't understand what you mean. Okay, anyway, you can send me an email at stockmoney@yahoo.com, and you can ask me questions and you explain what do you mean. Okay, so thank you very much for watching, and see you next week. Anyone who has any question, you just ask me, send me an email, and I will answer back. Thank you very much, and see you next week.